We head over to Kenya now, where Johnson Nderi, research analyst at Suntra Investment Bank, is standing by. A very good morning to you, Johnson. It's all been about Greece over the past few days. Now, looking at that outcome, is this what you had expected, and what's the kind of impact we could see coming through on the Kenyan markets?
Well, just before the weekend came through, from the opinion polls, we already saw that New Democracy was gaining support from its pro-Euro bailout policies. So for us, I think it was expected, but we didn't really experience too much flight to safety. So for us, I don't know. I don't want to say it had no impact, but let's just say it works out for the best.
Had no impact, but we did have foreign investors falling back below that 50% mark. Are you perhaps seeing foreign investors coming back into the market, even though the amount was still substantial?
Well, I expect them to stay there because the yields in the market are still good at 3,700 or slightly below that. We've got a market PE of about 8, which relatively promises an earnings yield of about 12.5%. So, I mean, that's compared to what they are getting in Europe in the new era of zero interest rates. I think the Nairobi Securities Exchange is attractive enough.
Looking at the Nairobi Securities Exchange, like you touched on it a bit, on that 3,700 points mark, could we see this market, the market breaching this level? We are only 6 points away from that level at this stage.
It's entirely possible. However, perhaps a word of caution. We've seen yields in the T-bill rates starting to rise again. That gives us cause for concern, because if yields get high enough, they could start drawing away money from the equity sector to fixed income. However, in the short run, we expect that momentum could push it up above 3,700.
Let's come back to the equity market, looking at some of the stocks that are due to, or some of the companies that are due to report results this week. We have Centum results tomorrow. What are your expectations on that front?
Well, first of all, we expect the drop in interest rates since the last time they announced to help boost some of their asset prices. So because they usually benchmark their valuations on prevailing interest rates. Secondly, we expect a little bit more growth coming through from the real estate portfolio, which perhaps since the last time they announced, we could have seen a little bit more work that has come through, which obviously will manifest itself in terms of increase in valuations. So largely, I'm positive, and of course the other portfolio, what they call the quoted private equity, should have seen some growth, because we know that they liquidated their market position when the markets were still good before they dropped. So, and I know they probably went in a big way to fixed income, and I know they earned good yields. So again, from the three business lines, we expect positive growth.
Looking at Pan-African Insurance now, that stock ended up quite up 8% in last week's trading session. What is your long-term outlook on Pan-African Insurance?
Well, one thing that is coming through with Pan-Africa is that more and more their revenues are becoming, or their profits are becoming more stable. So the volatility that was characteristic of the stock 3-4 years ago is gone. So that can only be good for the company, because if they sustain the profitability with the high ROEs, can only, or rather current high ROEs can only be good for the company. So, and of course, with talks of the main company, the anchor shareholder increasing their stake in the company can only mean a scarcity premium could be placed on the shares, because already it's not a very liquid stock. So with good performance, biggest life insurer in the market, if not amongst the biggest. I guess valuations could see some more upward momentum coming through.
Upward momentum coming through for Pan-African Insurance. A company that was quite interesting for me was Samir Africa. Now, that company is saying that it's looking to diversify its market and starting to produce gumboots. I know they're in the tire business, but now they want to look into gumboots. What are your thoughts on Samir Africa delving into gumboots at this stage?
Well, that's an interesting idea they may have. They have there. It's difficult to make a judgment at this point, because I don't know whether it's difficult to judge whether it's out of desperation or it's out of identifying a market opportunity. But it's interesting that they will do that. Perhaps an issue that requires a bit more analysis coming in the future.
So your outlook on Samir Africa, it looks like there are a bit of troubles coming through for the company.
Well, from the real estate investment, we know it's not performing as well as it's supposed to. Again, in the tires business, they're probably facing quite a bit of competition. But then again, they're in the rubber business. So perhaps maybe they have waste rubber that they could be using to create other rubber products. Or perhaps they probably want to just diversify away from tires, or maybe there's an entire change of strategy. It'll be interesting to find that out from the management.